1 year ago, I uploaded this video. Almost nobody watched it. Almost nobody believed it. But some people did. And if you invested after watching that video, your total return, including capital gains and monthly distributions, would have been approximately 110%. Today, I'm going to do something that might upset some DFN investors. Because although DFN made us a lot of money, I don't think it's the best opportunity. In fact, there are two funds I would buy before DFN today. One is obvious. The other, almost nobody is talking about. Let's start with why DFN worked. Section 1. Why DFN made 110%. This wasn't luck, this wasn't timing, this wasn't gambling. There were 4 reasons. Reason 1. Canadian blue-chip dividend stocks recovered. Royal Bank, TD, Enbridge. Those companies recovered strongly. DFN simply amplified that move. Reason 2. NAV recovered. Split-share corporations don't survive on yield. They survive on net asset value. As NAV recovered, confidence returned. Reason 3. Monthly distributions became sustainable again. Investors stopped worrying. Money flowed back. Section 2. The mistake most investors make. Most investors chase performance. Professionals chase opportunity. There is a huge difference. If a stock goes from $5 to $10, most people think it's a great stock. Professionals ask, is it still cheap? That's why we're comparing DFN against FFN and FTN. Let's start with DFN. I still love this fund. It owns many of Canada's highest quality dividend companies: banks, pipelines, telecoms, insurance, utilities. It has rewarded shareholders for years. But here's my concern. The market already knows that. The easy money may already have been made. Can DFN still go higher? Absolutely. Can it double again from here? I think that's a much tougher challenge. Now let's move to FFN. This fund is different. Instead of owning multiple sectors, it focuses almost entirely on financial companies across Canada and the United States. According to its official annual information form, the portfolio generally holds 15 North American financial companies, with each position typically representing 4 to 8% of assets. Why does that matter? Because banks have historically benefited when lending activity improves, capital markets strengthen, and investor confidence returns. If that environment continues, FFN could have meaningful upside. Now here's the surprise. FTN. This might actually be the most misunderstood fund of the 3. Why? Because everyone compares yields. Almost nobody compares portfolio construction. FTN sits between DFN and FFN. It isn't as concentrated as FFN. It isn't as broad as DFN. Think of it like this. DFN is the all-rounder. FFN is the financial specialist. FTN is the balanced hybrid. For investors who want monthly income but don't want to bet everything on one sector, FTN deserves far more attention than it gets. It may not generate the biggest headlines, but sometimes boring investments produce the best long-term results. That's exactly why I wouldn't ignore FTN. Let's make this practical. Imagine I have $30,000 sitting in cash. How would I invest it? Would I put 100% into DFN? No. Here's what I'd do. 40% FFN because I believe North American financials still have attractive long-term potential. 35% FTN because it offers a more balanced way to generate monthly income while reducing reliance on a single theme. 25% DFN because I still like the portfolio. But after a very strong run, I believe future upside may be more moderate. Notice something? I'm not abandoning DFN. I'm simply recognizing that the opportunity set has evolved. What if you already own DFN? This is probably the question I've been asked the most. Should you sell? Not necessarily. If you've earned around 110% since last year, congratulations. That's exactly what investing is about. The question isn't, should I sell? The better question is, does my portfolio still reflect where I see the best opportunities over the next 3 to 5 years? For some investors, the answer may be to keep collecting income. For others, it may make sense to rebalance part of the gains into opportunities they believe have stronger forward-looking potential. If you're only chasing the highest yield, DFN wins, with roughly a 12.6% to 13% annual yield. FFN currently offers around 11.5 to 12.3%, while FTN is in the 11 to 12.5% range. But here's the mistake many investors make. The highest yield doesn't automatically mean the best investment. Final verdict. 1 year ago, the market was wrong about DFN. Today, I think the market may be overlooking something else. Here's my ranking today. 1. FFN, best combination of sector tailwinds, income, and future opportunity. 2. FTN, the balanced choice that deserves more attention than it gets. 3. DFN, a fantastic investment over the past year. But after delivering roughly 110% for investors who bought around the time of my previous video, based on my calculations, I believe expectations should now be more measured. Markets reward investors who focus on where value is going, not just where value has already been. If this video helped you see these funds differently, subscribe and let me know in the comments which one you'd buy today. Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.